and doing great. We got Bitcoin here unchanged on the day, holding on here to this nice, beautiful breakout after having consolidated since March. A lot of people have lots of lofty expectations for what this next leg will look like. We said well before it broke out to the upside, we said if we get the breakout to the upside, the first thing that we're going to be doing is looking for why we maintain those higher expectations if we have an invalidation. And liquidity grabs work both ways. They work to the upside and they work to the downside. And when you get a breakout of a pattern and you have that breakout, a liquidity grab could shoot the other way. Or we could be working with a liquidity grab this way over here as we have the breakout. We're coming in right now for a retest. That retest right now is well defined and it looks very, very healthy right now. If we break this line that we put in yesterday's stream during our session, that would be the first indication that we're looking at a sharper retest. But we still have into this area over here, all the way into 65,000 for it still to be a healthy retest. Even if you look over here and you could say, well, Jordan, 66,500, that's the upper line over there. And that's true. We want to hold above that. We want to hold above this trend line we have right over here today. That would be looking super strong and super healthy. But even if we break below this sell impulse, that's just the first early warning sign. We could come into that 66,500. If we break below this area, well, that's a little bit concerning. That sets us back to strong neutral. And then if we break below, we have over here right around 63, just below 64,000. If we broke below that sell impulse, that would signal that, well, that was a liquidity grab to the upside. And although you could have multiple fake outs. And one of the things about strong markets is sometimes that you get a breakout and it runs away. People don't get the opportunity to buy the dip. You see a lot. It's happening on gold right now. On gold right now, a lot of people were disbelievers that we were going to see a breakout, because for the longest time, for 15 years, it wasn't able to get above this level. And then as it broke out, we were right on time on that, right? As it broke out, a lot of people have been waiting for that pullback for it to become more attractive. All of a sudden, it's trading at $2,700 over there, up 35%. Sometimes you get runaway breakouts and you don't get that opportunity for that pullback that you would like to see. That's a sign of a very, very strong market. This is what we're competing with. This is there was a tweet in the Discord yesterday, and hedge funds or the best performing hedge funds, dare I say, performing 12%. I don't know if it's the best performing or hedge funds. Average hedge fund, 12% this year. And people were like, I did that last month, right? So there we go. And then we're looking. But sometimes you get not a runaway breakout. Sometimes you get lots of shakeouts. Those are very, very, very difficult to trade because what they do is they exhaust traders before the big move. An example of a potential shakeout is on the US dollar. And that was coming back to over here. And you could see that, again, the green was early. Trend line break, 2 touches. That was early. Then a lot of other people were tracking this head and shoulders. And you see, look above it. Look above that yellow line. You get the breakout, and then it gets faded down to the downside. And then you get a breakout to the upside, and then you get a nice retest, and then it runs away. That exhausts a lot of traders mentally. It really, really does. And if you're like, you have to have a plan, and you have to stick to that plan, and you have to stay on the right side. You can't. So many traders I know that like they give up, or they capitulate, they exhaust themselves right before the big move that they saw coming. So maybe that's what's taking place on Bitcoin right now. Maybe that we're seeing a lot of, maybe, or I should say, maybe we will see. Right now, it looks healthy. Right, again, we have the multi-month, 7-month consolidation. And all eyes are on it, and it breaks out, and then it only comes in and tags the all-time high. That's a little bit disconcerting. I posted on Twitter. I mean, usually double tops don't stand, but they're called double tops for a reason, and they can. And really, for this to be confirmed, we would need to trade below 52,000. I have horizontal support right over here. I know that we wicked below it. That wick below was on the Japanese yen unwind, but we would have to trade below 52,850 for that to be a confirmed double top below the swing low. Is that going to happen? I don't know what's going to happen, to be honest. I just want to stay on the right side. So that's exactly what we're watching. This is not, some people I put out, that's a double top, like, oh, that's a triple top or a multi. No, there's two touches. There's a touch here and there's a touch here. Like, this is not a touch. That's not a touch. That's not a touch. These are not touches. Double top. Like, these are people with, like, yeah, anyway, very clear, very simple. Very simple. So we got that taking place on Bitcoin, and that's exactly what we're watching over here. Everything continues to look healthy. What about today's jobs number? Did that look healthy? Market thus far reacting pretty well. We'll take a look at Nasdaq in 1 second, but we have Bitcoin still on the sidelines. We're looking at Ethereum holding a short position. Cardano just got shuck out of a short position, tagging up a loss over here. And you can see that Cardano over here just tagging a loss, 3.72%. They have over here, by the way, for those that are curious, they have a new, this in the discretionary channel in the Discord, they just let me know. They have a new Trading Views holding a November contest. They call it the Leap. And if you want to participate in it, you could jump in over there and get involved. How are we looking? Cardano taking a stop loss over there. Bitcoin's out on the sidelines. Let me refresh that page so we could see where Bitcoin is. Bull market run continues holding on to its buy side trade, suggesting that the conditions are there for further upside. You can see the average trade on that is 64%. Ethereum is holding that short trade, and Cardano, I feel like got like just shaken out hard on here. That's what happens when you're dealing with alts, right? They lead to the big gains, but they got sharp moves. And then Solana is here out on the sideline currently. Let's see how close the Bitcoin is to re-entering the market right now. And yeah, so this is for our 8-hour, and we see that Bitcoin needs to just continue this nice retest that's underway, discretionary. If it's able to go ahead and break out of that retest that we're flirting with this trend line, we will be back long and likely right before the breakout above the all-time high. So we continue to watch that. But right now, just safe out on the sidelines. We're dealing with a very, very mixed market here as Ethereum is short, right? Right now, you're seeing Bitcoin here not able to hold on to its early gains. Bitcoin was up well over 1% earlier today. Ethereum up 2% today, giving back some gains thus far. But I think it's too soon to digest the data. And when I'm talking about data, what I'm talking about is today we had obviously two major things in play. We had overnight, we had Amazon's earnings, what came in, and Intel as well, both with really good numbers. Markets kind of like holding on to some early slight gains overnight on those numbers. You could see right now, after the non-farm payroll numbers coming in, 12,000 jobs added, and a complete disaster. Some people were looking for a negative print though. Before like overnight, you had some people that were actually looking for a negative print. So I'm not so sure that it was unexpected. And you can see over here, or I'd highlighted earlier, we have Morgan Stanley suggests the slowdown in headline payrolls this month will be noise from hurricane strikes and seasonal factors. I'm not sure. I haven't read the details to see whether or not that's correct or not. But not only did we see a very, very big miss, we saw private jobs going negative for the first time since 2020. It's all about the government, but I think it's highly concerning. We are seeing a lot of people talking about like I don't even want to mention the word because people get a little crazy. I don't even want to mention the word recession. People, but liquidity. Yeah. So, you have to watch the jobs numbers. By the way, it's not just the headline that's disconcerting. We saw August was revised down by 81,000. September was revised down by 31,000. It's a trend that is showing a weakening job market. Usually what happens after the job market goes is that's when equities fall as well. So, what did the market do with that number? Well, we have a short 25% basis point cut coming up at the November 7th meeting. I'm more concerned with December. Current probabilities are an 81% chance of another 25 basis point cut. Let's look at what happened over here today. And you can see that went up from, it was locked in more decidedly. So outside of any strong surprises in the next 6 weeks, such as, higher than not just like small misses on inflation, but like really hot prints, or, I can't imagine. It looks like that's the direction that they're headed. The R word, no one wants to talk about it. A lot of, but it's always, whenever a recession happens, everyone's indignant about it. It seems to always be the way. There are other people that have been calling for a recession for the last 2 years. Timing is everything in this job. Timing is everything. You got to get it right. There's no room for error. That's for sure. Jumping back over here, let's look at what's happening with the Nasdaq. So yesterday we were looking at that critical breakdown that was taking place on the Nasdaq. And I want you to see it from this view over here first. So this trend line over here, we broke down, closed below it yesterday. And thus far, after Amazon beat and then also non-farm payrolls, we've seen Nasdaq rallying now up 1% off its low. And it's above the breakdown of the trend line. If it closes above there, that invalidates that critical breakdown from yesterday. Get it? Like leaving the stream yesterday, that's exactly what we were looking at. The only thing is that there's a lot of trading left today. I don't know if it's going to close on the line, below the line, above the line. We're waiting for the close. So if we close above and we're back to neutral, that's good. Then maybe even we could see something crazy happen. What's crazy, Jordan? Well, let me show you what crazy would look like. I meant to include this in the stream yesterday. I didn't. I showed it in the Discord channel. And if you were to take like that trend line over here, you could see 1 test, 2 test. And then I'm going to let go of this. You could draw it in, but I'm going to let go of it and focus where I have the more touches. Thing about like TA, it's very discretionary, right? These lines, this chicken scratch is not. It's just structure of the market. But nevertheless, that's a broadening wedge, like to me. And it looks, is it possible that off of this test that we're able to come out and take out this high and test up over here around 21,000? Yeah, that could happen. But look at this. We have this red line over here. Look at how this was all support. That was all support. We wicked below it here. This is a 2-hour time frame. Did we close above it or did we closed above it? So you could see that like from the daily time frame over here, this is held, this red line, ever since it first broke above in September. That's big resistance. We're going to need to clear above that if we even have any chance of going ahead and then sending it back towards the top. But like that could happen. I wouldn't be surprised if and I don't think anyone would be surprised if that were to occur. But if we close below here and then we resume down next week and doing that off of a nice beat off of Amazon, doing that off of, I mean, it's funny, like the jobs report today is ugly and it's bad. But other people are like, oh, well, we're going to get another 25 basis point cut. I don't know. Is that more psychological than having an effect on things? There's a lot of other very like extremely smarter people than myself that would have the answer to that. I can only speculate. I'm not really sure. If the market were to fade today's quote unquote like favorable bullish number, it's bad anyway. It's horrible. The jobs report was terrible. But if like, because they're going to cut more, if that's a good thing in your eyes and that's like going to be conducive for risk here, and then, but if not, if that's faded, then that's a really bad look. Like if this is the chance for the bulls to hold on and move. This part of cycle, as far as I'm concerned, when the Fed begins cutting, is the time of cycle that is the most difficult. There's no more 4-year halving. Oh, but it's the liquidity. Oh, well, I don't know. 2000 and 2008 were up liquidity years. Yes, but QE didn't launch to 2008. Listen, we'll figure it out by staying in front of it all. My assumption here is that, and other people have wildly different assumptions, like as in like global liquidity is running up and M2 is screaming, and like I don't know what happens, but I know that anyway. I know a lot more than I lead on perhaps, but no, this is the point of cycle that's the most difficult to navigate. It's really easy when the Fed jumps in and like debases and expands their balance sheet and starts running QE. Granted, a lot of those same macro people expecting insolvency events after that, and listen, timing is everything. I don't know what happens next with Bitcoin just because of a jobs report, but I do know that the jobs report and the revisions that we've been seeing all year long suggest that the economy is not as strong as we're led to believe. Obviously, inflation is a lot stronger than we're also led to believe. And we've been seeing government basically propping up the jobs market as well as GDP. We have an election coming up. Let's see what happens. But this is not the best time of cycle here, as the next thing that happened is going to be the Fed is forced to stop QT. They're not going to do that because everything is going well. They're not going to do that because everything is going well. They're going to do it when they're forced to do it. As they're being forced to do it, likely risk is not behaving in that moment well. And then after that, and whatever response we see from the central banks, that's probably a good time for risk. Again, timing is everything. Will Bitcoin perform well during that period? I assume so, very much. Maybe equities perform better initially, but Bitcoin will perform well once we get to that next juncture of the Fed cycle. And between now and then, let's try to stay on the right side. I don't know. Stock market up after election, except in 2000 and 2008. I don't know. I mean, the stock market after 2000 got wrecked. So I'm not sure. I'm not sure. Stocks this morning, we saw an exit from Nvidia on the opening, and that was fine. Got to lock in a small 7.7% gain. Tesla stopped out. Tesla is just like coiled now and ready for a big, big, big gain. Tesla stopped out again, continuing that. Let me see what's going on with Tesla over here. Is Tesla, look at this, pending long continuing, and it continues to hold over here as Tesla. Is Tesla waiting on the election? I assume if Trump doesn't win, it's not going to be a good look for Tesla. And I believe if Trump wins, it's going to be very favorable for Tesla. That's speculation that we've held on for a bit. Let's hold on and see if that continues. TQQQ also exiting out on the market today and taking a break even on that. And that's what we want to see is push our winners, cut our losers short, stay out on the right side. And then that's where we are as far as positioning. Tesla, back to back on Tesla. We got Tesla hunting 1, 2, 3, 4 in a row. Very common, right? Very, 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 very common. And usually after you see that, it's coiled up and the next move is a good one. You can see that. So average max drawdown 10%, average trade 9%, 35% profitability, right? So and the win to loss ratio over here is average winning trade 29%, with the average losing trade 1.7%. I mean, that's a risk to reward 14 to 1 that 1 to 14 that people would really, 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 really desire. So that's what you're looking at. And that's, right on time. Ace, is the template broken? I'm just reading through some of these beautiful comments. I miss all the lives with everyone out here in the public. And we're at a critical juncture over here, heading into the election. Volatility, I expect through the end of the year, is going to continue to rise. I know a lot of people think that, September and October is just like super, super favorable. And it could be, but it could also be double red. And we want to have no assumptions and make sure we stay on the right side. That's for sure. Have you seen the reverse repo here at its lowest since early 2021, down to 201 billion? And Janet is just super on the bid over here. New issuances, quick math, that's like 300. And so quick math is 160, 240, 310, 350, $350 billion of new issuances. They're trying to keep it up through the election, into the election day, doing everything they have, throwing it at it. Once that strain more, you could just scroll back a little bit. It's probably after the first 10 minutes that we got into the talk of the jobs numbers. And you could just look for this on your screen. Look for that or that, and you'll find it really, really quick. But they're ugly. They're bad. There's not it's really, really bad. And the response is, okay, 25 basis points, little, priced in further for the December meeting. And I guess the bull case is forget that the jobs market is really in trouble here, and forget that usually leads to recession. The Fed's gonna cut 25 basis points. And that seems to be what so far early in the session. But look what the 10-year did. 10-year, perfect retest. This is our conservative line. We were we were the earliest, I thought, except Stanley Druckenmiller took 20% of his family office and shorted bonds here as well. So we legend. But we called it, and then we were able to get the black diamond breakout, and then into the conservative line, which was the expectation of, hey, I think that's probably reasonable place for a pullback. But we broke above it, retested once, retested again here today. This morning, a lot of people were probably thinking, bonds going big because we're going into recession. But now they've faded that and have resumed upwards. We're into some pretty strong resistance right over here. This line that we're touching right now, you can see that we peaked into it over here, right? And then again over here, that's what we're into. Close above this one, and this is unprecedented as far as the move on the 10-year after the Fed begins an easing cycle. But that's nothing new. We're in unprecedented times. And cycles are going to be a lot sharper and quicker. Be prepared. Reza, love to see you, brother. Glad to see you in here right now. That's been all week. All week. Gold here this morning. What's it up to? Let me come down to a small time frame over here. And we were just saying, like, the first time we even talked about a pullback potential was as we came in and we're tagging the target over here. We're close enough. Target at 28,000, just above 28. Close enough. If we get this black diamond breakdown, that would be the first sell impulse. That would then be signaling a potential test into this area 25, almost 2,600. So anyway, I'm just following it to see what happens over here with the shiny stuff. Good one, Ace. So when we looked at last week of 10 years behavior after the Fed's first cut, there were only two other occurrences where the 10-year basically rose this sharply, this quickly. And in one of those cases, right around from this area that we're in here, or in both cases, from this area that we're in right over here before the break above. So this is the first time that it's gone as far as it's gone. But you saw a pullback and then a big breakout to the upside. And the other occurrence, you saw a sharper breakdown, probably like into this line over here, and then a breakout not as elevated as the one with we were just talking about that earlier in the session, runaway versus deeper pullbacks. And the deeper pullback, it led to a new all-time, not all-time, it's into a higher high, or in yields, I guess you could, anyway, it led to a higher high, but not as elevated as the shorter breakdown. So this might suggest that this one is going to be going thus far even higher, or I think it does. But as far as invalidations, Ace, so this is going to be conservative, right? And that seems very healthy and correct. And then this is aggressive, but that's not going to work. Look at this. We'll key off those two lines over there, or three lines. And true enough, that's just a clone of this. So I like that better. We'll go with that. So that would be, and that's a hard one, Ace, because we have the conservative line, which kind of trumps. The higher we get, then the more effective that this line would be, as well as we'll have the opportunity to lock in and look for an underbelly. But right now, like, we're keying off of the conservative breakout, and that's been retested once, held, and this morning held, and now resuming up. So there's a strong sell-off occurring thus far. Yeah, and there's a great chance of that because, again, as we looked at yesterday, ETH doesn't really come into play until quantitative tightening starts, balance sheet expansion begins again, not QT, not QE, but simple balance sheet expansion, and then like after first equity gets the love. So we still have some time before probably as soon as everyone writes Ethereum off will be the time. But Ethereum will do some Ethereum things once again. Ace, thanks for taking a look at where we're wrong. That's always what we want to look for. And this would be early right now, the earliest signs of any type of reversal taking place. And then this would be like confirmed that the move is over, likely. And there we are. So we're watching this closely today. I mean, we trade versus fiat. Like the way that we're able to stack Bitcoin is through trading from fiat. And I mean, Bitcoin is like everything is actually in the law. Bitcoin is consistent. We'll give it that. Oh, by the way, I didn't talk about V3 yesterday, which is still holding on to its latest entry over here. V3 is still holding on to its current trade. So that's kind of neat how it's holding on. And like as we hold that trend line over here, why BTC 107, this is highly experimental, right? And, you know, like this is going back from probably 2014, I assume. And okay, the return is great and drawdown's great. But if you look at Ethereum, it's going to destroy Bitcoin in returns as far as trading versus fiat. So there you go. I have no idea, Reza. I have no idea. I have no idea. I'm not familiar. All right, everyone. We'll keep it light and sweet today as we head into the weekend. And we're watching some important. The most important thing that I'm watching is two things. I'm watching the Nasdaq to see whether or not we get an invalidation of yesterday's critical breakdown or it stays in play. And the other thing that I'm watching that's super important here today is I'm watching whether or not we get this aggressive sell impulse. Again, that's the first indication something's not right. If that happens, it sets up a liquidity grab to the upside, so long as 65,000 holds. If 65,000 doesn't hold, that's not looking so good. That would be a breakdown over here of that conservative line. And then then the liquidity grab is actually looking to the upside. So the liquidity grab was on that breakout out of that consolidation. A lot of people still have hope at this point. If we were to trade below here, as I said, 65,000. Which is super correct as far as this line over here, 65,000. But this trend line over here, and I'll get it exact as possible, that is below that. So 63,500. If we were to trade below 63,500, that is looking like a liquidity grab to the upside, and that suggests a sharper move downside. And most people over here from the breakout will be in that just like deer in headlights, hoping that like they just wake up and things change. It's not usually the case. Right now, the liquidity grab is favoring the upside, where you had the breakout, the retest into this pocket. Even if we get into there, that would be off of this sell impulse, a grab to take us higher. That's what we're watching right now. Is a super cycle possible? It is. Super cycle is super possible. So we're looking at the current rally in equities, the current bull market going on 2 years. And everything suggests that when a bull market lasts that long, that the probabilities of it lasting longer are well intact. Well intact. And you can make the case that for many different, you know what you could do? Watch Darius. Listen to Darius on the Macro Voices podcast that was just released on yesterday. And that is like making the case for as bullish as you can get, I suppose, if you ignore the jobs numbers. But he'll articulate the bullish of the bullish case extremely, extremely well. And that will get you excited for a potential super cycle that's underway. And it very well could be. but I'm watching the things that I'm watching and making clear to you. And as I said, the technicals are always first, right? And right now we had a critical breakdown yesterday. We have every reason, like really terrible job numbers is not a good thing. But if the market decides that, or more cuts are, and the bulls are able to take control and close above here, that's a good thing. If that were to happen, then we got this one over here as well. We got to close above here as well. This trend line we looked at yesterday. Those are the levels we're watching. So if we don't, we got a hiccup, and then we got further downside, much more likely, and then we'll take it from there, time from time. All right, everyone. Which one, Don? Which template are you talking about? Because we have so many. Have a wonderful, wonderful weekend. I don't know. I don't really think that we're going to see a double top. That would require us trading right below 52,000. That could happen. It's not a big deal, especially this time of cycle. I keep telling you, this is the most difficult time of cycle. A 30% correction is well in line, as is anything greater. So it could happen. And if that happens, by the way, just so everyone is aware, that is not the top for this cycle, in my opinion. The top of this cycle will come whenever and after they're forced to return to the printers. We're not there yet. We haven't begun close to the time where they're going to need, and maybe Powell pulls off the impossible. Maybe he does. But the job market is not suggesting that's what's happening right now. It's not suggesting it. And that's the camp we're in. We're following the technical. We'll stay on the right side. And then we'll take it session by session, day by day. God bless you all. Have a wonderful weekend. CTM next week, we are really going to get to work. And we got to start organizing and just progressing in the development of V3 iterations. So I'm getting myself psyched up because that's super, super important, super, super exciting. For now, everyone, have a beautiful day.